What up, my good people? This is your boy Dr. Candles in the building. I'm back again with another amazing content. If this is your first time, kindly hit the subscribe button. So this time around is gonna be complete breakdown of some of the trades we took advantage last week. Yeah, that is we have USDCHF, we have the Pound JPY, we have the EURCAD, and some other pairs. So stay tuned so I can walk you through all these setups. Maybe you may take advantage of it another time when you see it in the market, or possibly learn a lesson from it. So without wasting my time, let's hop in. Okay, so let me start from USDCHF, popularly known as the USD chef or USD the Swiss francs. So this is what I'm interested in. Before then, let me zoom on to the daily time frame. So on the daily time frame, you can see a whole bunch of what impulse and then correction, impulse, correction over here. So this was a trade I took on this same pair around when I think 25th May. There was a nice setup that I took here. In fact, it was lovely. But this is what I'm actually interested in. You see, after this huge move, there was a whole lot of unfilled orders. Market is supposed to fill before possibly going back here. So something like this, that, or something like this. So there were a whole lot of liquidity. There were a whole lot of unfilled orders. Sorry, there are a lot of unfilled orders. Market has to fill within this range of this. So I will make a video and explain those kind of unfilled orders, why market has to pick those unfilled orders for you guys. But for now, just understand the breakdown I'm trying to communicate here on the USDCHF. So something like this has to happen. But now, just by knowing the direction of the market alone doesn't give you an entry. You need an entry technique, right? So you can enter, save, and then make money. Because the fact that you predicted the market that it has to fill some orders around here before going up, that doesn't make you a profitable forex trader. Because maybe you can equally enter and the market will start going up before coming down to fill all the orders that you were trying to communicate. Even though market has to fill these orders, there are possibility where market will go up instead of coming down. It will just go up before what coming down to fill those orders and then up again. So let's move on to the H4 time frame. Maybe things might get clearer for you here. So there are a whole lot of things I want to explain on this setups. Just pay attention and then still something out of it. So you see, this is euro pound, right? So even though there were unfilled orders here for the banks to fill, whilst you are here waiting for the market to get to this zone, you could equally pick a different setups around there. You see, I don't know if all of you watching this video watch my video on Quasimodo. If you didn't watch my video on Quasimodo, you might not understand the Quasimodo aspect I'm going to explain here. So if you want to understand this concept, kindly go back and watch the Quasimodo I explained in my previous video. So when you come back here and I'm explaining anything about Quasimodo, you won't be confused. So as you can see here, what happened here was literally Quasimodo. You see, market created what? A high here. See, there was a high here, then a low. Now another high. So this will now be higher high, and then what? Lower low. So as you can see, I have a high and then a low, a higher high, and then what? A lower low. Remember the structure of Quasimodo. It has the second high has to break through the first high to form a higher high, and then now that one should break the high and the low to form a what? A lower low. Then now we can have our what? Quasimodo here, Quasimodo setup around here. So here will now be our what? QML level, right? So QML, that is the Quasimodo level. Now a lot of you, especially my students who were just following the principle of the bank trading strategy, who just pick trade with they could just pick trade here with the supply zone. You see, so this is where confluence is, or this is where confluence play an important role. You see, whilst you are here waiting for market to hit your zone for you to sell, if you didn't have the idea of Quasimodo, you will wait here and the market will never come back for you to sell. Other than that, just because you have an idea that there is a Quasimodo level created around closer, almost closer, this is about 10% to your what supply zone, you could just what pick a trade here, but now your stop loss will not be above the zone, the supply zone you created. I hope you understand. In that case, and your take profit will not be to the what, to the nearest what, lower low. So now this trade will now be something like this to here. So this will now be your what, your take profit for this trade. So a lot of people actually miss this trade on my platform, but you see, if you are smart, you are smart. They still came back and then took this trade. Let me explain to you how they took this trade. This is the second opportunity they had for this trade, even though somebody gave a notice on that, but a lot of people missed it because they were waiting for this supply zone. Now market still what, gave us another opportunity here, created a very nice supply zone with a very small risk to reward ratio. Check it out here. You see, this was the nice one. Almost everybody took it. So this is how I couple the what, the Quasimodo strategy with my bank trading strategy. You see, so I'm not just trading the Quasimodo on its own. I have a basis why I think market is gonna fall, but I was just trying to find out when it will fall before I can what, enter with a minimum risk but high reward ratio. So that is basically the USDCHF. So I have actually closed about 90% of my profit before this reversal. I took a different position here waiting for market. You see, this is about, this trade is just about this trade is just about 1:, let's see, 1:, okay, there is possible. So this will be like 1:7 risk to reward ratio, even though market hasn't gotten to our TP, but most of them close they are running trade because they don't want to leave the trade to be running throughout the weekend, because they don't possibly know what is going to happen. Even though I still have some position here running, still waiting for Monday to see what's going to happen. Okay, so let's move on to the second pair, which is I think pounds JPY. We also took advantage of pounds JPY, which is our second trade. So pounds JPY, let me go to the higher time frame. This is D1. You see the current trend for pound JPY is an uptrend. You see markets keep going up and down, up and down, up down, up down. So basically it's still an uptrend. You see, it's still an uptrend now. It's still an uptrend now. The same concept. The same concept here. It's still an uptrend. The same concept here. Markets still had some unfilled orders to fill around this area. So I think on the 18th June, I had some trade around here that gave me very nice money. So over here, even though because I knew there was what unfilled orders to fill here, when market was up around this area, I knew very well that market is gonna fall. So I needed a different setup to take a sell, even though the trend was still an uptrend. I took a sell because of this unfilled orders. I knew very well market is gonna come back to fill them. You see, so what happens is that over here I still apply the Quasimodo principle. You see, with the Quasimodo principle, what I did is that here will be my my high. Remember, let me do it well, and then here will be my low. Right, so above here will be the high, and then here will now be a the lower low. Quasimodo structure, right? We met all the criteria. So now what do? You measure the level. Quasimodo. So this is the level. So this will be your your Quasimodo level, which is the KOML level. So over here, you just pick a trade around here, stop loss above. So if you are going to use the Quasimodo principle, you will pick a trade around here, stop loss, see, above the higher high, and then you take profit to the lower low. So this will be about 2.4 risk to reward ratio. This is very bad, so we don't pick those kind of trade. But what we do is that we now consider our bank trading strategy. So like we have a nice move from the bank here, taking this basic candlestick into consideration. We can draw our zone here. A very nice zone here, as you can see. So after here, market came back exactly into that zone. Now check the risk to reward ratio. Okay, let me leave it around this zone, this to the nearest. So now check the risk to reward ratio, 4.5, 1:4.5. You see, so this is how we couple the bank trading strategy with Quasimodo for an entry. So now this is the trade we took last week. I shared this, and I shared the success story of my students on my Instagram. Most of you were like, especially there's SMC traders PM me were like, oh, I didn't see the reason why your students were taking those trades on Pound JPY. We're buying Pound JPY, and I was like, oh, there is a reason. So maybe let me explain it to you now here. You didn't see it, but we saw it, and then we took advantage of it. So anything we did wasn't just something to represent something. There were bases to anything that we do on the page. So you see what happened here. This look like a peanut or a triangle. Let's just make it a triangle. This is a contracting triangle, and this is what an expanding triangle. So you see, after this triangle, there was a huge move from the bank. Market came back exactly on that level of the triangle. You pick an order, and then boom, you see how market paid we. Now the same thing happens here. The same thing happens here. Now after this big move, you can equally draw two zones here, trace to the market to see the reaction of the market around here. Now the mistake a whole lot of people did on this trade is immediately market entered this zone, they felt like it is time to buy pounds JPY. Most of my students entered here, but you see, because we always have other confirmation coupled with the candlestick, we usually wait for the candlestick as well. So there was no candle. I was like, no, if there is no reversal candlestick, there's no way I'm gonna enter into this market. So a lot of people waited for this candlestick. After this huge reversal candlestick that took away most of our accounts, took away all the retail traders trying to buy around here, took them out, blew the account, came back and then formed a very nice reversal candlestick. Comfortably we entered around here to make money. I hope that is clear. You see how we confluence the bank trading strategy with other strategy. I hope you understand. So this is basically what we did on pounds JPY. We took almost about let me see, we took over 200 pips on this pair. So that is basically how you can take advantage of how we took advantage of the pounds USD. So now let me just give you some apple on what you should be looking out for pounds USD the upcoming week. So the upcoming week you can actually watch on this. There are two things involved for pounds USD, pound JPY. Pound JPY can actually react on this level. Pound can actually react on this level. Remember, we also have a confirmation candlestick around that same level. See, confirmation candlestick around that same level. Pound USD can actually act. So once they meet your 6 edges, you can actually shoot pounds JPY around this area and then make money. So that is it for pound JPY. Let me go to which pair again. Okay, I can see CAD JPY, EURCAD, EURCAD to be precise. So EURCAD 2, we made a lot of money from EURCAD. See, we had two zones on EURCAD. So the first zone, we took trade on this zone assets last 8th July, around 8th July. That was last 2 weeks. Yeah, took our first trade on this zone. So we had two zones waiting to be filled by the banks, one here, another one there. So the first one got filled around 8th of July. That gave us a massive profit, came back and then went up. Now break through that first zone heading towards the second zone. So as a bank trader always waiting, we had our other confirmations, the 6 edges. So over here, this actually met almost all the 6 edges, So that is why we short this pair around this area for a massive profit. As I speak to you now, we are almost heading to our TP. Because of the weekend, most traders close their position on EURCAD. So that is basically what we do in our academy. We don't share signals, we only share setups, share trade ideas. We trade independently. Just understand the concept of the market. Once somebody drop a setup and it is in confluence with your 6 edges that you were taught, you take a trade without waiting for somebody to tell you whether to take this trade or not. So if you really like this video and want me to be doing more of these videos every week, kindly hit the subscribe button, smash the like button, share for others to also have a feel of the work I'm trying to put on for other people to take advantage. Money making forex is very easy. It's very easy if you really understand the principle. If you really understand the principle, money making in forex becomes easy for you. So kindly share my content, like, drop your comments. We move on. Thank you very much for your time. Peace.